estimates of the 12% rise in profits. This is Southeast Asia's second largest lender. It did say that it's wary, though, of geopolitical risks as well as the uncertainty in the oil market. Let's get to Singapore and join Bloomberg Intelligence's Diksha Gera. What is the read across for the other two banks from these numbers out of OCBC?
Yeah, hi there. So actually, a lot of focus have been placed on margins for the Singapore banks, and even a slight move in margins tends to impact their earnings a fair bit. So consensus have been focusing a lot more, given the fact that SIBOR has gone up about 13 basis points in this quarter. But what has changed in this cycle is the flow-through from the Fed rate hikes to the Singapore rates has been rather different this time around. It's been the flow-through has been much weaker, and even with the 13 basis points in SIBOR, you've seen OCBC has only seen a 1 basis points rise in margins. So that is a tricky one, and I think part of it is because the competition in the loan markets is actually intensifying a fair bit. So banks are kind of undercutting on the pricing a little bit, and that is the one thing that I think that people will focus on after the earnings as well.
Well, the earnings outlook, looking at that for these three banks, has it materially weakened?
Actually, no. So traditionally, Sing banks have been a leverage play on margins, as I just mentioned, but they've actually diversified their growth engines a fair bit. So if you see, like, non-interest income growth has been a key driver for earnings in this cycle. The wealth management business has surprised very nicely this year, and if you see, the contribution towards total earnings has been a fair bit. So I think lending has picked up quite a bit. We expected the year to have been pretty muted, but trade and other elements have surprised positively. So the outlook is still quite robust, despite the fact that the macro environment is like a little bit iffy, if I can call it that.
Yeah, and OCBC grew loans, 11% as of September. What are the sectors that are showing the most dominance, and is that pace of growth sustainable?
Yeah, so the overall loan book was up 11%. Out of that, Singapore grew at 8%, and bulk of it was from Indonesia and Greater China, which are again looking interesting at this point. Singapore was a good surprise because trade has actually done very well. So we've seen almost 6% trade growth globally this year, which is very interesting, and I think our shipping analyst thinks it's going to be a similar year next year, even though fourth quarter could be a little bit of a seasonal weakness. But that has turned up very well for the Singapore bank's lending outlook. Secondly, the property sector doing very well has also helped. So we've seen there's a rebound in price, and there's a fair bit of demand coming in those. So those are the other elements which are helping the lending outlook for the Sing banks.
All right, thank you so much for that, Diksha Gera there from Bloomberg Intelligence. Coming up, going to get